Hello, everyone. Zoran here from Hot Property Buyers Agency and Your Empire here in Brisbane today for the March market roundup. I'm joined by Chris Gray, our Sydney buyers agent from Your Empire, and Lauren Staley from Infolio Buyers Agency and also Your Empire in Melbourne. Guys, thank you very much for joining us on what looks like a sunny day all round. How are we going?
Yeah, no, it's the sun's shining, the property market's up, and it's life as usual.
Yeah, perfect. Well, let's start with you, Chris, in sunny Sydney. What are you seeing on the ground there at the moment when it comes to the property market? How are things developing as we delve into the year, deeper into the year, into March?
I'll look into the same time. I'll pull up the CoreLogic results so we can see those. Look, as we said last month, and nothing really happened since Australia Day, but we've had a cracking month, almost a double month in terms of clients coming on and clients that we bought. So certainly for Sydney, we're looking at up 0.5% for the month, 0.6 for the quarter and 10.6 annually. Melbourne, 0.1% for the month, minus 0.6 for the quarter, 4% annual. And Brisbane, 0.9% for the month, 2.9 for the quarter, and a massive 15.6 for the annual. So it's obviously looking good all around Australia. It's strong demand. We're seeing interest rates potentially coming off. At least they're on hold for the moment. And that's the thing is, we keep saying there's no more stock. There's plenty of people that want to buy it. Then a lot of the worries out of the market. And so I think there's more buyers coming on.
Yeah, for sure. And Lauren, what are you seeing? Obviously, we're seeing some relatively conservative growth, statistically speaking, out of Melbourne. But is that what you're seeing on the ground?
No, absolutely not. I think there's some real heat in our market. You've got to remember that data's across Greater Melbourne. We don't buy across Greater Melbourne. We buy in very specific blue chip suburbs. And as soon as we got back in the new year, there was genuine heat back in the market, and that's just all to do with sentiment, inflation coming down, and the talk of interest rates coming down towards the end of the year. The confidence is back. I mean, we're particularly trading in probably more expensive properties for the home buying sector. And even with it, when we're looking at our investment grade properties for investor, there's still nothing to buy. There's very, very limited stock. So not only is that bolstering value, but sentiment's bolstering value. I mean, I could give you two examples of properties just in this last fortnight where they sold for over $1 million above the top of the quoted range, $1 million over the top of the quoted range. So really, if anyone thinks that they were waiting for the market to drop or for a better opportunity to buy, that they have missed that boat. There is nothing surer than that.
Yeah, for sure. Is there any particular, I guess, property style or price point that is most active at the moment? Maybe necessarily, in your market that you deal with, but generally speaking across the networks you come across, is there a particular segment of the market that's exceedingly hot?
For me, I would suggest that it's the scaling up home buyers. So people who have potentially had their first or second home, maybe they lived in an apartment, they've moved into their first house and they're now double income, got some kids at school, potentially having a little bit of help from the bank with mum and dad, and they're buying a home somewhere between that sort of $4 to $6 million price range. It is just absolutely on fire. Yeah, but I'm also seeing the real top end of the market performing really well as well. We're at complete capacity, and there's been a big segment of buyers that have come on with us that have got budgets between sort of $5 to $10 million. That would be the higher end for us typically, but that seems to be more of the norm at the moment, and they're ready to go.
Yeah, for sure. Interestingly, here in Brisbane, we're finding that the entry level unit apartment market is the hottest we've seen it in years. Go back 5 or 10 years, you'd have to throw in a free set of steak knives with any offer you put in on a unit. And now it's, everyone wants a unit. We're seeing a lot of people at that more affordable end of the price bracket. And we're also seeing here in Brisbane that in that sort of high 1 million up to 3 million or mid 3 million mark, it's just the market's stuttering a little bit. I feel like that sort of segment of the market are often, sort of that middle to high income earners who are stretching for their ideal family home, still requiring some leverage, but maybe getting a little bit shell-shocked when they go to the bank and realize what their assessment rate's like and what their borrowing capacity is, and then also what the potential repayments would be on a $2 or $3 million home. Having said that, if you price the property really well and you present the property really well, they're still moving. That's definitely the case, but it is a little bit more fickle than it was previously. Chris, what else are you wanting to add in this month?
Yeah, well, we just did our annual survey. So pretty much every February or March, we survey kind of 10 or 15,000 people and say, what are your biggest regrets in property? What are your key learnings? What do you wish you did differently? And it's kind of unsurprising. We almost get the same results pretty much every time. And the classic thing is, I wish I bought more property. I wish I hadn't sold. I wish I'd done things sooner. I wish I hadn't listened to all my friends and family and taken some professional advice and just got in. And that's the thing is, we look at the graphs of the last 40 or 50 years, and that's the key message is you've just got to get in. And no matter how expensive you think it is at the time, how unaffordable it is, and you come up with all these different things, and obviously the media fuels all of this as well. But the bottom line is people find a way to afford things, again, especially in the blue chip suburbs, like Zoran's saying, it's the bank of mum and dad. Quite often they've sold a business, they're high income earners, they're double income earners, and
Actually, just noting something else that it came up yesterday in our office that's quite poignant is obviously we've got a rent roll that we manage, and the increase in land tax has come through. So we're now starting to get it wasn't, we all thought that we were going to get this flurry of people wanting to sell their investment properties when we had 13 interest rate rises. But interestingly, the thing that seems to be tipping people over the edge in relation to investment buying and their strategy is that these increased land tax. So we would have had half a dozen to a dozen people just this week alone, and it's only Wednesday, contacting us saying, hey, the land tax has gone up. What do we do? Can we make it work? So I think that what we're going to find in the Melbourne property market is that there's going to be more pressure on rents, because landlords are going to be saying, well, in order for me to be able to hold this and make this a sustainable investment, we're going to need to increase our rents. And we've already got a housing crisis in Melbourne. So it's going to be really interesting to see how that plays out over the course of the next 6 to 12 months.
Yeah, I agree. Here in Queensland, the rental shortage is definitely still prevalent, and there's a lot of pressure out there for tenants to try and find something. I don't think the Queensland government's doing anything to help that at all. And also in a lot of where my clients at, we've been established here in Brisbane since 2008. So we've got some clients who have been 10 to 15 years, with us from buying and property management, renovation, and now they're actually looking at exiting the market, pay down their principal place of residence and phase into, that retirement phase with a little bit less debt. So we're seeing quite a few clients exiting the property market and selling down a portion of their portfolio, predominantly when we're assisting with the vendor advocacy service on their exit to ensure a successful outcome. We're actually finding that most of those buyers are owner-occupiers. 60 to 80% of those properties are transacting then onto owner-occupiers as well. So again, that stock is evaporating from the rental market and putting even more pressure. I actually just saw an article here in the Courier Mail. A Greens candidate put their hand up and said, hey, we should get rid of Eagle Farm Racecourse and not worry about horse racing and put some affordable housing in one of Brisbane's most blue chip suburbs. I don't think that's going to fly. But again, people are starting to become really creative around how they think they're going to solve this. But it's also starting to become more and more political here in Queensland, given it's such prices.
As you can see in Sydney, we've still got people abseiling down our building, still doing the renovations and the upgrade on a building, which should be done in the next few weeks, I think. But again, I think the special levies here are $100,000 per unit because it's an 18-story building in an expensive Darling Point. And that's the thing is they can try and increase the rents, but they're not going to recruit an extra 100,000, especially from me, I think. Again, you've got to look after your properties. And just going back to the land tax thing, I'm not sure what it's like in your states, but in Sydney or in New South Wales now, you can actually spread the repayments over 9 months. And there's not that much discount paying up front. So this is the thing, a lot of people win. So I pay about $70,000 or $80,000 in land tax. So it's a massive amount, but per $1 million, it's about $5,000 per $1 million worth of kind of units I've got. And the reason most people hate it is because they've got to write that check and it's one big lump sum, maybe over a couple of months. But if effectively we got to the stage that it came out of the property management fees, and I'm only paying maybe $400 or $500 a month, it will just disappear into all the other things. Whereas I'm paying, say, effectively $60,000 in interest repayments. So the land tax is just small, but it's because you've got to write that one big check. That's why everyone hates it.
Yeah, I agree entirely. Yeah.
Hey, can you whack that on the Amex and get some points, or is that?
You can do that. I'm not sure if they take Amex. It's definitely Visa or MasterCard. Not sure if it's Amex.
If no one knows out there, Chris is the whisperer of points. Well, not technically the whisperer of points. That's Steve, but the user of points.
The points whisperer, as mentioned in one of my books, How to Live the Life of a Multimillionaire Without Being One. That's how you fly business and first class for the price of economy.
Exactly. Well, thank you everyone for joining us in the March. We'll call this March Madness, something like that. March Madness update as the market continues to evolve. It's ever changing. Thank you very much, Chris Gray from Your Empire in Sydney, Lauren Staley from Infolio and Your Empire in Melbourne, and obviously myself, Zoran Solano here from Hot Property Buyers Agency and Your Empire here in Brisbane. For all of your property needs, reach out to one of us and we would love to help. Thank you very much.
See you guys.